Hello, guys. What's up? Welcome to a new trading week. So let's break down our main character, Bitcoin, and I'll show you how you can get big moves and how do you trade some scenarios. So basically, what I do is I look at the monthly chart. Okay, this is very very important to me. So this is the way I'm gonna break it down. I'm gonna look for key resistance areas, right? Because this is what we have here. We're technically in a uptrend, but overall this is a downtrend. Okay, so this is just a correction of this big downtrend. So let's look where we at. If we look here, let's take an info line, and we can see that the low in 21 was here, but we'll take this one from here. This is the most relevant, so we'll take this one here, right? And then I just draw a box, right, from this low point here all the way to the last high here. And now we can see that this area is very important as resistance, right? So you have 1, 2, 3, 4, 5, 6, 7, 8, right? So you have eight key points that where the price rejected. Now, another way to do this is you draw a Fibonacci from the swing high to swing low, and you can see that we still have a lot of room to midpoint. Obviously, like now the macro data doesn't show us anything that doesn't suggest anything that this is bullish. Okay, we're still in a downtrend. We need to get past midpoint to consider this a new bull trend. That's my opinion, right? See where we rejected off the the big level here is 23.6. We're also at major resistance, so this is a nice confluence here for Bitcoin. Now we go to the weekly chart. Same stuff. I use the moving averages, the 50, 100, and 200. These I use them for confluence. So basically, we see we broke down, rejected, came retest, rejected, and now up. We still need to break the 101 to actually call it an upward trend. This is how I measure my trends on all time frames. Basically, the moving averages are telling me the bias, okay? But this is just part of a confluence and it's not to be used as a sole strategy, okay? Now, the highest it could have gone was 32k 350 or in around this area, right? Because this is where we kind of like started to break down, and this is like our key points here, right? As you can see here. In order to, you know, this type of action here, as you can see, it's like 1, 2, 3, 4, 5, 6, 7 weeks of not much happening. But I think we're breaking down, and I am in a short, and I'll explain to you how I took the short. Let's go back, zoom in into daily. So here we are like all this period here, we just sit. I had some scalps here and there in this area, but as you can see, 24 days, nothing happened. Then we had a sorry, not major, but we had a small pump here, right? That's not a big pump, but still 11%. And now we're starting to break down. If we close, as you can see, the 50 daily moving average held as support 1, 2, 3, 4, 5, 6, 7, 8. Now we're starting to break down. Once we close this candle below the 50 daily moving average, I think the next step would be, um, and it's like confluence with these highs here, right? So if we look here, that would be our key area, right? So let's zoom out. Okay. So this is where we're looking for our first take profit. Okay. So what we want to see is price breaking down, right? Probably will stall here because this is a good support area. Come back, bounce, you know, and then just sit here for a while. Just so you know, the market doesn't move in like only one sweep. This looks like a head and shoulders pattern to me, right? So it is possible that once it breaks, it's gonna be very, very fast. We might even go in one go like this from and take out 20Ks or 22. Where is it? Yeah, this area here. So let's mark a bit our area here in around 22 something. So this is like these are the areas that I'm looking for possible triggers. Okay, if we break below here, I will have to see how the price action behaves. But this for me is it's a possible long term buying opportunity in around 22K. Um, but if we break lower, I will um, obviously not gonna take it. So we have to be very, very patient. So yeah, in around 50 and 61%. This is what I'm looking for possible long-term opportunities. Um, if we look back here, let's define our range, right? So we had the previous range here. That's the 2022 range, right? And the deviation below. So this is our 2022 range. And now we have another range uh, from here, right? So this is our massive range that we're looking at basically, right? So still this is in a massive range, right? Nothing is happening, no bull market. Yes, short term is uh, definitely looks like a bullish impulse here, but the correction will come eventually because fundamentals are not allowing this market to go up. I will break the fundamentals for you on S&P. So this is the trade that I'm currently having. I've been waiting for this trade for quite a while. Um, I got it in around this area here. I think it was in the weekend, and then I said to my guys in the group, if you get 29,200, just take it, you know. Uh, I didn't get filled, but I started adding a bit lower. And the way I trade, I will explain in another video, is that I break down the orders, so um, I don't take a hard stop loss, right? So I'm just adding to my position, scaling in and out. But that will be another lesson for another time. Now, I think there will be some sort of small bounce at New York Open, and then we start to crash down again. So it will be something maybe like this. Come here, take the lows here. That's what I'm seeing. Um, I don't know if it will go like in one go, but technically that's what is supposed to happen. Um, this is a nice trade. It also I also got this ING That was in around here, I think. And Matic, uh, this one is a very, very good trade. I'm in it since Friday, and I'm just being patient. Once we get the retest here, I already added right here because I know that it will, retest and then come down, even if it deviates a bit above. If not, I will, if I see it back in the range and hold above the range with a daily candle close, I will definitely, for sure, close the position. But for now, I'm in good position, so I really don't want to do anything. Now, let's take a look at S&P, right? Uh, boom. So let's see. S&P, I'm in a big short here. Let me clear. Let me use this chart here. S&P is very, very, very strange as it's I don't know how to say this, but it's one of the weirdest uh, assets to trade right now, mainly because we're also in a range here. Right? There is nothing going on. This is the range, right? So that's okay. Let's see the ranges here. So this is our range, right? Nothing. It keeps knocking here at 4,200. Um, but my honest opinion is that I don't see breaking 4,200 on what's going on right now. I mean, it could. I mean, the squeeze can happen, but I really don't see how this massive, massive, massive range is gonna play out. So you have, if you look here, we have a deviation here. We can have a possible second deviation, but as you can see, price rejected quite often from this here. In terms of trend lines, it can have like this broken trend line here that kind of gives you some sort of indication of what's going on. But let's break down the rally on Friday to show you how, like, the mechanics of the market, right? Um, the mechanics of the market are very, very strange right now. I also got surprised, but let's break it down. Let's go to uh, a calendar and see what happened. So let's see recent. Let's see Friday apply. So on Friday we had NFP, right? If you don't know what NFP is, that will be in another video. So it's very, very important to keep track of the economic calendar. Here, everything looks really, really good, although these numbers are not that high as expected because this is revised from 2,360K. So they didn't add that much jobs, but average hourly earnings, this looks like it's gonna fuel inflation. Unemployment rate is still ticking lower, which is not what the Fed wants. So overall, if you look at this rally, we had these conditions on Friday. So I'll write them down. NFP, strong numbers across the report. Now, market is pricing in a soft landing, right? So we're not thinking of a recession anymore, right? Now, we're not thinking of a recession. So now we have optimism, FT Financial Times, right? wrote an article about Westpac saying that they're for sale. Westpac is a regional bank. If you're not familiar with what's going on at the moment, there is a regional bank crisis, and they wrote Westpac Alliance Bank is for sale. And then they came out and it said it's not for sale, we're doing okay. And then all the financial sector started to rally. So if the financial market started to rally, right, S&P also started to rally. Another thing that uh, was happening on a Friday, uh, I think not Friday, Thursday, Apple earnings came in very, very strong. Strong earnings. But that kind of, there was like some sort of optimism in the market. Apple, the biggest, I think it's like 2 trillion or something evaluated company, or even more. I'm not trading stocks, so I don't have any fucking idea about stocks or anything, right? So if you know how many trillions they're worth, that's what you see reflected in the S&P and the Nasdaq, obviously. Um, it's kind of like, if you look, they kind of correlated. Bitcoin had a nice rally on Friday. S&P had a nice rally on Friday. So overall, I am actually short on this. It's a swing trade. I got in around here. Let me see, where is the trade? Yeah, here, and this is my stop loss. Okay, I don't see this. As I said, this is not a hard stop loss. I will have to manage the trade once it gets past 4,200. I'll see what if I add or if I start to scale out. But it's very, very important to to have your risk managed accordingly and to your balance, right? Now let's get back to the chart. That was the reason um for this to rally. If this continues to push higher, um, I'm kind of doubting it, but that would be a very, very the pain trade will be this going up and the dollar crashing down. So for now, we have to be very, very patient. We are sitting in good positions, so overall, there is no need for us to stress. All right. Uh, this broke down really nicely out of the channel, retested the channel highs. It did some scammy weekend price action here. I scaled out on Sunday on some positions, and then I added at the open last night. So this is how you kind of break down a trade. You have to start from the monthly chart, and the reason why I'm saying start from the monthly chart and daily chart, I mean from monthly to daily, to see where the macro resistance is, because that's very, very important. Usually, the highest probability for anything to happen is at macro support and macro resistance. Not in between. I mean, you can trade the mid levels, but you have to see like how the price is breaking down or up, you know, in the this is your top of the range, and this is your range from below, right? I hope you find this info useful, and if you have questions, feel free to ask me anything, and I will gladly answer your questions. Cheers, and have a great day.